Hi everyone, welcome to Vauld's official YouTube channel. So let me start today's video by quoting Mr. Ray Dalio, what he said at Davos during a World Economic Forum event. So he said that cash is trash and equities are trashier. Now, what does that mean? It's a very scary statement. So on today's video, we are going to analyze some of the prominent asset classes. For example, equities is an asset class in itself. Cryptos is an asset class in itself. Real estate is an asset class in itself. So we will analyze some of the prominent asset classes. So this will be a fact-based, data-driven discussion. So let us kickstart the discussion by speaking about cash as an asset class. So when I say cash, I mean fiat currencies. So fiat currencies could be INR, US dollar, Singapore dollars. So what is the situation? What is going to happen if you are saving your entire money in fiat currencies and putting it in your bank account? So is that the right strategy, not the right strategy? What are some of the salient points that you need to keep in mind? So first and foremost, you must recollect the viewpoint expressed by Mr. Ray Dalio that cash is trash. And it truly is. There is no simpler way of putting it. And Mr. Ray Dalio has put it somewhat mildly because if you look at the data, the signs are really worrying. For example, if you consider US dollar, approximately 80% of the US dollars have been printed after 2020. Now, this is a huge number. Now, whenever there is an increased supply of any asset, for example, if you consider mangoes or pineapples in the market, and suddenly if the market is flooded by a lot of quantity of these mangoes or pineapples, then what is going to happen to the price or real value of a mango or a pineapple? It will come down because the supply of the commodity has increased. So in simple terms, what has happened with cash is that there has been so much cash that has been printed that the real value of a dollar has come down. Is this a recent phenomena? The answer is no. The speed has just gotten accelerated post 2020. But if you study the history of US dollar, which is the apex currency or the reserve currency of the world, you will clearly notice that US dollar is losing its buying power. So let me show that via a visual. So you can clearly see that back in 1910, you could purchase $25 worth of good with $1. So that was the equation back in the day. Now the situation is that dollar over time has lost approximately 97% of its buying power. Now, this is a very, very worrying sign. Now, of course, there are other factors at play and there can be a lot of counter arguments that can be given. For example, inflation has gone up, salary has gone up. Correct. I'm not debating all that, but here is a very brief example to help you consolidate this point. So consider, for example, that back in 1910, you would have picked $1 and converted that into gold. And you would have kept that gold under your bed. And now if you're trying to sell that gold, has the value gone down? The answer is no, the value has gone up. But imagine a different scenario that you would have picked that $1 bill and kept it under your pillow. And now suddenly you will find it would have lost 97% of its value. Now you will give me a counter argument that, okay, that makes my age 110. So please don't debate the semantics here. I'm just trying to simply show you that as an asset class, US dollar or any other fiat currency for that matter has lost insane amount of its value simply because of the fact that there is more money that has been produced in the economy. So from an investment point of view, does it make sense to save your money in US dollar or INR or Singapore dollars? The short answer is no. You should not be saving your money in INR or US dollar. You must convert it into some other asset. So what could be those assets? So from that viewpoint, let us discuss the second asset class, which are stocks. Now, again, if we go back and analyze Mr. Ray Dalio's commentary, he has said that cash is trash, but equities are trashier. Now, that's again a very, very worrying sign, but I think this statement needs to be looked more into. If you study the landscape of stocks, what you will find is that stocks are of different categories. One of the categorizations of stocks could be that you can divide stocks into growth stocks and value stocks. Now, post 2020, you would have seen the markets making new high. For example, if you study the performance of S&P 500, you will see that the markets were trading at 3,380 and they roughly fell to approximately 2,300. But after 2020 recovery, they made a new high at approximately 4,800. This is almost 50% growth. Now, why am I telling you this story? I am telling you this story because this rally, what was the contributor? The contributor of this rally were growth stocks. You would have seen companies like Tesla, companies like Amazon making new highs. These are all growth stocks. These are technology driven stocks. Now, when the markets have started to correct, these growth stocks have started shrinking. As a result, a lot of air has been sucked out of these growth stocks, but value stocks are still performing well. So let me demonstrate this point by talking about Mr. Warren Buffett's recent purchases. So recently, Mr. Warren Buffett has purchased a company called as Occidental Petroleum, and he invested roughly $10 billion in it. In fact, at one point in time, he was mulling the viewpoint to invest roughly $20 billion on that company. Additionally, he has also purchased a new stock called as Chevron on his portfolio. Now, both these companies are based in traditional cash flow oriented businesses, and both are oil driven businesses. So the point that I'm getting at is fairly simple, that essentially in the equities market, there are two categories of stocks that are out there. One is called as growth stocks and one is called as value stocks. Growth stocks grew very, very fast post 2020, and now because the markets have started to shrink, a lot of air has been sucked out of these growth stocks. On the flip side, value stocks are still being considered to be a good buy by prominent investors like Mr. Warren Buffett, who up until 2021 was sitting on billions and billions of dollars of cash, but was not investing in the market. And he has recently started taking big positions in the market. So we cannot categorize the entire equities market as a trashy market. There are very good buying opportunities in the equities segment. This is not a recommendation from our side to buy. I'm just telling you that there are options that are available on which you should do further due diligence. So this brings us to the third asset class, which are cryptocurrencies. Now, cryptocurrencies like stocks are of various categories. For example, if you consider something like Bitcoin, it is a blockchain network. Ethereum is a blockchain network. These are more prominent networks, so to say. And on the flip side, we have newer elements that are in play. For example, there are sidechain projects, there are NFTs, and there are a bunch of other DeFi projects that are fairly new. So lumping all cryptocurrencies together and calling it one single crypto coin might not be correct. And again, a further study needs to be done. So let me speak about it by giving two examples. So first example will be of Bitcoin. If you consider the performance of Bitcoin over the last 6 months, you will see that Bitcoin has fallen by roughly 37% as of now. Is that a big fall? Is that not a big fall? Everything can be discussed from a relative term, but I think a comparison could be made with Amazon. So if you consider the last 6-month performance of Amazon, it has fallen by roughly 29%. So there is not a huge difference in terms of the fall that both Bitcoin and Amazon have exhibited. Now, I do not mean to say that there is a correlation between Bitcoin prices and Amazon stocks prices, but the larger point that I'm trying to drive home is that both Bitcoin and Amazon stocks are growth stocks. So as the markets have fallen, growth stocks are likely to suffer more. So this brings us to another extreme category of cryptos, which could be considered as meme coins. For example, these could be Shiba Inu or Dogecoin. And if you study the last 6-month performance of Dogecoin, for example, it has fallen by roughly 51%. So does that make Dogecoin bad or good? We will not be able to comment on that. But again, you need to remember the risk reward equation of entering into such assets as of now. If you feel that markets have already corrected quite a lot and growth assets will not correct, then probably you could consider studying Dogecoin even more closely. On the flip side, if you're of the view that no, correction has not happened completely in the market yet, then you must flock more towards stable stocks, so to say. So let me very quickly plot some growth assets on a spectrum. This will help you understand the risk associated with these assets more. So if you consider this spectrum, then these would be slightly less risky asset. What do I mean by traditional companies? These would be companies like Walmart. These would be companies like PepsiCo. These would be companies like Occidental Petroleum. So these are slightly more traditional cash flow based companies. Then slightly more riskier assets would be Amazon or other tech stocks. Then we move towards stable or slightly more stable cryptocurrencies like Bitcoin. Then finally, on the right hand side, we will have newer DeFi projects and Dogecoin. So now, depending on your risk appetite, your construction of your portfolio, and where you think the markets are heading, you could consider taking some position across the spectrum. So now comes the final asset class, which is real estate. Now there are typically 3 types of real estates that are available. For example, there is residential property. This could be flat or villas that you buy. Second could be a commercial property, and third could be a digital property. For example, if you are buying REITs, then it could be a digital property. Similarly, if you are buying a property on a metaverse, then again, definitely it is a digital property. So I will speak about the real estate segment more from a conventional real estate, which includes real estate in form of commercial real estate and housing. So for example, if you take a look at this particular chart, this comes from India and the study had been done by RBI, and it categorically shows that over the last 1 decade, the real estate sector has depicted a very slow growth rate. So the typical growth rate of real estate has been between 2 to 3%. If you aggregate even the rental yield of these properties, then the total return would come out to be somewhere between 5 to 6%. Now, in the last 1 decade, fixed deposits have performed better. So the bottom line is that in the last 1 decade, the real estate sector has not performed well, especially in a country like India. So of course, the nature of the return might change depending on the locality or the city in which you are living. But if we look at national aggregate level data, then the real estate sector has been an underperformer. This brings us to an opportunity in the real estate sector also. For example, if you look at some of the forecasts and prediction, it is being stated that real estate sector from this point on might grow between 8 to 9%. Now, this is fairly stellar growth rate and you could consider looking at the real estate sector more closely. So in closing, there are a few key points that you must remember. First and foremost, like always, focus on developing a diversified portfolio. Just because real estate sector is going to go up higher does not mean that you discount all the other asset classes. It is always advisable to diversify and hedge your risk. Second key point, there are always good pockets of opportunities between every asset class. For example, if you're considering investing in cryptocurrencies and if you want to buy Bitcoin, do check out Vauld first and foremost, and at the same time understand the risk profile of Bitcoin and whether or not you see Bitcoin as a good asset class within the crypto space. So pick your assets within a specified asset class intelligently. Third and finally, look at the opinions of major commentators because there are so many commentators who are taking completely diverging viewpoints. For example, Mr. Warren Buffett took a completely opposite viewpoint in 2020 and 2021 and he missed out on some great opportunities in terms of amping up his portfolio return, and now he is buying. And now Mr. Ray Dalio is taking a contrary viewpoint. So the point is that every investor in this market is playing as per their understanding. So you must learn from everyone and finally do your own due diligence and take some positions. I hope you enjoyed the video. Please press the like button and I will see you soon.